What's up, guys? Philip at Trade Genius. All right, you're not going to want to miss this video. We're going to talk about the Bitcoin price, obviously breaking out, really going parabolic here. So we're going to talk about these levels that we're taking out and why this next level is going to be a bit different than these other ones. We're also going to take a look at these moving averages and how those are going to come into play. Also going to look at long-term stuff, where we're at in terms of the cycle and the velocity of this move, where we are in the longer term channel. We're also going to take a look at this fib multiplier chart. I'll talk about that a little bit later in the video and how that's good at measuring tops. We'll also take a look at the futures expiration chart and talk about the dynamics of that. Take a look at crypto fear and greed. We're also going to look at stock to flow, talk about that. That's real interesting. And we're also going to take a look at the Tether chart. So let's dive into it. Guys, if you're interested in the moneymaker signal, this thing's just been killing it. Head over to tradelikeagenius.com. We're going to extend the specials one more day. You can use either the coupon code, get the indicator by itself, or you can get one of the packages that has the indicator in it. Again, head over to tradelikeagenius.com. Links are below. All right, guys, let's dive into this video.
Trade Genius.
All right, guys, weekly Bitcoin chart. Basically, we've came up, here was another weekly top at around 99.48. That broke out over the weekend and basically topped out so far at 11,215 on Coinbase. Begs to question this level here coming into play. I think at this point, when you're looking at the weekly chart and this move, and if you compare it to the velocity of other moves, when you start getting these types of bars and really shallow pullbacks, you start getting into like this parabolic move. Most likely, we're going to probably test this 11,800 plus level. Now, all these levels, right, have been just getting run over. We came up. There was basically not a lot of resistance at this huge level. This was a huge level that just basically got ran over, and it created this huge squeeze. Again, I think a lot of that was because the accumulation was happening down here. You notice the average volume was going up and just tipped the scales to the point where there was just an overwhelming change in equilibrium to the buy side, and whatever sell supply was here stacked up just got eaten. So that's pretty telling, and at that point, all these other key levels that normally in a market would be areas where you would at least pause for a while and then break through are just getting eaten up. Here's one weekly candle that came up to that first weekly resistance and didn't spend much time below it, and everything else has really just been getting overrun. And this one at this level here with the 9,900 area just getting smashed heavily. So now this level comes into play, 11,800. So why is this different? Well, if you look back in this area of the chart, okay, price comes down, dips down on this pullback. This is where things were, this is a blow off, right? So you have just very large harmonics, prices swinging violently, low of 9,000. So that gets bought. They run it all the way back up to a high of 11,849. Okay, so that's this line here. So that's one. They reject it down. We make another swing low of 5,873. Boom, they buy it right back up. That peaks out at 11,775. Okay, so that was first attempt at getting back above that level, rejected. Second attempt, rejected that week. The following week, it runs up. And this is a very bullish weekly bar, although it didn't engulf this candle, nor did it close above this candle high. So that was the next thing that was being anticipated on this following week. This week starts off, it gets up to 11,645, and then a rejection, and that was the final rejection of that area. So, what I'm looking at is basically just above where we've made a high is going to be some serious, I think, resistance as we get into that. Now, if this level gets taken out, you're essentially going to be looking at this next high of 17,140 and ultimately all-time highs. Volume gets real weird up in here because there just isn't a lot of historical volume at these levels. So there's going to be a bit of price discovery, and you could see some crazy moves through here because, ultimately the way this works is anybody who had bought up in this level, maybe looking to get out at break even, that's usually why things flip to resistance from being support. And so, but you don't have a lot of volume up there, so there's not a lot of that resistance. That being said, this thing is getting extremely overbought, and so now we're going to look at some longer term things to kind of put that into perspective. So when we get above so this orange line is the 50 weekly moving average. Okay, so this is a weekly chart. The red is the 200 period moving average on the weekly. That's generally the spot that if you want to do long-term accumulation, that's where you do it. And that's where price generally heads to in between the halving cycles, which are these blue vertical bars. So as you can see, when these bull markets start, they do a clean breakaway from the 50 period moving average. So like we had here, And right now, the velocity is kind of like what we've seen back in 2012, albeit much lower prices back then, and a much different market too. But that's, commensurate with price. So as price increases, you're going to need a lot more market participation. So I think that's what we're seeing now, is because we need larger inflows of money. And, the current state of affairs in the world, you're going to start seeing larger inflows into a store of value or a flight to safety. And that's what Bitcoin's becoming. And we'll get into that in another video later this week. But anyway, back to price action getting above the 50 period moving average. So, normally the 50 period moving average is resisted the first time out of a bear cycle, and then the second push goes through. You saw that in the last halving cycle and then pushed through. On this particular one, it didn't really reject. It spent a couple of weeks around it, and then boom, busted through. So now, historically speaking, when we come out of that and get this far away from the 50 period weekly moving average, we should expect some sort of pullback psychologically. So, these are all psychological things. These are cycles. So we will get a decent pullback on this. This is getting ahead of itself. These black bars are projected based on the previous cycle of where we would have expected price to be, and we're just getting way ahead of what's happened in the past. So as far as the velocity of the move ahead of the halving cycle, this is the strongest thing we've ever seen in terms of being this far out from the halving cycle and a move like this. Another way to put this into perspective is looking at this logarithmic chart. So basically these are measurements and tells us, what happens before the halving cycle and after the halving cycle. So before the halving cycle was pretty perfect as far as the bottom in here, that worked out. And post halving top, takes us over $275,000, and that would take us approximately toward the end of September, or September 2021. And what we're doing is we're kind of nuking that curve right here. So this is getting ahead of itself, and we will expect to see a pullback. Now, this is where we can talk about levels. This chart here is basically taking the 50 period weekly moving average, which is a real key weekly moving average, and it takes and puts fib multipliers on it. So this was some work done by a gentleman, and I will actually cover this more in depth in a later video, but it does a decent job of pinpointing cycle tops. So what we just tagged was perfectly at the fib 2 level. So these are Fibonacci levels. Okay, you have all these different levels. I added a 1.236 because I think it does a good job of catching pullbacks. 1.6, 2, 3, 5, 8, 13, and 21. And this tagged that perfectly. So this is a candidate for a top here. Now I'm tempering that with the fact that we may overthrow that a little bit. Even if we did overthrow that up to that 11,800 level, on the when you pull back, zoom out on that chart, that would just be a small overthrow on that level on the big picture. And then if we did pull back, what we'd be looking at for is probably a pullback to this blue level or this green level, which historically, when we get these breakouts to that fib 2 line, you can see pullbacks to either the green or the blue, and we've seen that. Again, here was one, and actually in 2012, that cycle went all the way up to the next fib 3 line, and then ultimately the fib 1.6 buoyed price on a pullback. So we don't have a lot of data points on this, but I think those fib measurements, Bitcoin is very mathematical, and I think that plays a lot into the price action of this particular commodity. So that's kind of what I'm looking at. But this, I think, I wouldn't be surprised if this pushes higher again in the coming week. But this area is a potential top. Otherwise, we'd be looking at, and historically, this would be, nothing has ever measured higher than this level here at 16,800. But right now, we're probably looking pretty toppy as far as maybe one more push. The reason for that is, if we go back to this chart here, you're going to notice we have a pretty decent bearish divergence on the weekly. This is the RSI, and it's not making a new high. The weekly is going to close here in a few hours. Sunday evening has been known for a push, so this bar might close even higher than this. But it doesn't look like we're going to get a higher reading on RSI. So it looks like we're going to have a bearish divergence on the RSI on the weekly bar. So that's warning sign number one that this thing is starting to get a little overdone. We also have another chart that you can look at when it comes to looking at when things can get a little bit overdone as well on the upside, and that's looking at the BitMEX longs versus shorts and the funding rates. Okay, so this is the funding rates for BitMEX, and you'll notice that you're better off when you have a dip in the funding rate goes negative, that means that the short side is getting a little crowded, especially in an up move. That's the spots you'd like to get in. When the funding rate is positive and it's really high like it is now, that means that longs are paying shorts. That means this side of the trade's crowded. And that's not really where you want to be swinging long. Like if this drops off back down to neutral or something, that'd bode a little bit better. But you want to be careful when things are like that, because as you see in this area here, things actually rolled over from this high funding surge. And here we are again, even more concentrated to the long side. Okay, so this is the BitMEX leveraged exchange out of Hong Kong, and that's where most of your high leverage futures trading is going on, mostly by a retail market over there. But that's a good indicator to take a look at. Also, too, the Bitfinex shorts are continuing to rise. So as long as that's going up, that's going to be fuel for more upside. Okay, so when you see a sharp drop off in this, like we saw here, a lot of times that will, and I know it's counterintuitive because you think, well, if the shorts dropped off, why not? They missed out on this move down, but that removes the short squeeze fuel. And if you see a sharp drop in that, heads up, because that could pull back. Okay, guys, futures expiration. No more of the yellow lines, which are the CBOE expirations. Those are done. June was the last contract. They haven't rolled out anymore, and they're not going to. Those are done. CBOE just didn't fill a niche. The contract size for institutional investors wasn't the right size. The CME product is what the institutional guys are using, and as far as the retail crowd, BitMEX has been fulfilling that. So it wasn't a negative that it went away. It's just there wasn't really a market case for it. CME contracts in red. Now, as we've talked about before, you'll see pivots around those. This is the semi-annual contract coming up this Friday on expiration. So those can tend to actually create a big pivot move. And if we look back at the previous one in June, you'll notice that price was trending, hits that, and then pretty decent sized bounce. And this was in a bear market, so you actually had a bullish bounce off of that semi-annual expiration. So it'll be interesting to see if we see the similar move, especially if we spike up into these levels. So if we can get a surge up into this and then past expiration, don't be surprised if we see a pullback off of that. And I think ultimately, we see a pullback down into this 9,000 range. All right, let's take a look at crypto fear and greed. Fear and greed. Now, this thing's interesting because, again, we haven't seen it in a bull market. And now that we have, and we said we kind of want to take a seat and see what this thing does. And we've been pushing up around this 83, 84. Even with these big moves, it doesn't seem to want to go higher. So they take into account things like social media and things like that. So it's interesting that we're not seeing a squirt higher into, like, say, the 90s. So keeping an eye on that. I wouldn't take action on this unless we saw an initial jerk down that took us down, like, say, into like the low 70s, high 60s. I think that would be your cue that the initial pullback might be putting that first move into a larger down move. Nothing to do here at the moment. This is stock to flow. We're going to talk about this later in the week as well, so stay tuned for that. But essentially what it does is it tells us where we can expect Bitcoin price to be considering the stock to flow ratio. So that is how much of the circulating supply ratio to how fast it's being created, or the inflation rate. All right, so we have about 1,800 Bitcoins that are created per day versus the circulating supply. And you can overlay that model onto historical pricing, and you get kind of a stock to flow expected price. Currently, the stock to flow price is $7,000. You get to post halving and it jumps to $62,000. And this thing has been hugging that model the whole time. Currently, the stock to flow for Bitcoin is around 25, so that's more on par with silver. At the peak of 2017, Bitcoin did get fairly close to silver's market cap. So in terms of that, Bitcoin's cheap. In terms of looking ahead to where this thing's going as far as the reduced inflation rate, it's really cheap. That being said, we are ahead of things here in the cycle. Our last cycle, we really didn't start getting back above that until we got closer to the halving. So things again, this chart, I think, shows us clearly that the price valuation is a lot more aggressive than in previous cycles ahead of the halving. So we just have to be careful here. Things are getting overbought. This is our tether map, and as you can see, this was a blatant leading indicator. We talked about this last week, guys, and sure enough, price went up and met it. and now we're starting to get a little bit of a pullback in the tether cap. Last time we saw that here and price met it, there was a bit of gyration for a few days. Here was another area where tether cap pulled back and we had a little bit of a dip in the price of Bitcoin. So, I would say if we see another surge higher, that's probably going to be, especially if we get into that 11,600 to 800 area, going to be looking at that area for signs of weakness and pullback, because I think that's again, that's a key spot. So there you have it, guys. Decent uptrend. Here's again daily chart, and we are getting toppy on things here, so just be careful. But Bitcoin gets into this mode, this volatility mode. This is where you can trade this thing on smaller time frames. So you could drill down to an hourly chart, and like we have here, and in the channel again, we want to see money makers in the bottom of the channel, and you pick those up, and this is the kind of environment, and you can have a fairly close stop. And then the way that it's pulsing, this next measured move would be up to about 11,500. And I kind of like that, considering that the real resistance on that weekly chart that we talked about is above that. So you can play this Bitcoin this week on the smaller time frames. The volatility is extremely high, and a lot of guys really dig that as far as getting the ability to trade that, especially on the leveraged exchanges. So I expect the volatility to continue this week. For me, the big level is going to be above that 11,600 to 800 area. All right, guys, well, that's it for this video. I hope that helps. A lot of information there. We're going to talk about a few things that in this video in further detail later in the week. Some good stuff there. Appreciate you guys watching the video. Please hit like and subscribe. Again, head over to tradelikeagenius.com if you're interested in our moneymaker signals, or joining us in the room for our crypto and binary signals, as well as stock and ETFs. All right, guys, thanks for watching. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.